What do you wish we taught everyone from the ages of 10 to 20?
Sure.
5 different things around money.
First thing would be, what is money? Because money, as we know it, is fake. Our dollars are just pieces of paper. I grew up thinking that our paper dollars are like the holy grail. You want to save this money because it is the most valuable thing there is. As I became older, I started to realize that that's not the case. Our paper dollars are just pieces of paper. It's fiat currency, which means it's issued by the government, and the value is backed through the strength of the government. Now, we're lucky here that the United States is the world's superpower. We have the world's strongest military. We have the world's strongest economy. But we can't stay on top forever. And inflation is when the value of a dollar goes down. So these dollars, which many of us think that if we hoard this, we'll become wealthy, save your money to wealth, is actually keeping you poor, and it's making you poorer each and every day. So the first thing you have to understand is, what is money? The second thing you have to understand is, what do wealthy people work for? And most of us, the majority of us, are taught to work to get a job and climb that corporate ladder. But wealthy people are doing something completely different. They're working to own the corporate ladder. They're working for something called equity. And this thing really blew my mind, because wealthy people are not working for that paycheck. They're working to own a piece of the company. That way they can get a piece of the profits. So the best way to understand this is, a lot of times people complain about how much money I'm making. I wish my boss paid me more. And this is where, if you start to understand the system, you'll start to ask the right questions. See, a big company, you have to ask the question, who are they working for? Are they working to take care of their employees? Are they working to take care of their customers? Neither. They're working to take care of one person, their shareholders. It's this concept called fiduciary duty.
Right.
I learned this in law school. The executives of a company have a fiduciary duty, not towards the employees, not towards the customers, but towards the shareholders, the owners of the company. Now, what that means, an easy example of this is, you're going out to dinner with your girlfriend or your wife, and you're on a date, and you get a text from one of your good friends, say, hey, let's go play Fortnite right now. Your fiduciary duty at the moment is to be with your girlfriend, to be with your wife, to be with your partner, to spend time with him or her. If you go out and leave, you're going to get in trouble, right?
Yeah.
So it's, who is your alliance to? And the shareholders, the executives, the CEO and the executives company, their fiduciary duty is to the shareholders, the owners of the company. So what are they trying to do? They're working to drive up the valuation of the company. So once you start to understand that, you'll realize why there's this big discrepancy between what people are paid and what people want to be paid. And when you start to understand that, you're going to change what you do with your money. That's why I said a minute ago, or a little bit ago, wealthy people are working to not climb the corporate ladder, but own the corporate ladder. So how do you get that equity, that ownership? You have to own a piece of the corporate ladder. Now, if you work for a public company, that means now you can take some of your income and you can buy stock in the company. Maybe they pay you with equity. Maybe they give you some sort of revenue share. That's what we do in my companies. Or if your company doesn't do that, then you have to start taking this money that you're earning and you have to start investing it into a place where you're getting equity. Maybe that means stocks, maybe that means real estate. It could be there's a number of different investments, but you have to work towards that equity.
Yeah.
The third thing is that you have to think bigger. I know I grew up thinking that somebody who looks like me, somebody who's brown, somebody who wears a turban, somebody who didn't have entrepreneur, investor parents could go out and do this, because you think that somebody like me can't do this. My parents also told me that I couldn't do it. I didn't know anybody doing it. I didn't know any investors. But you have to be the one to take that first step. And once you start to take that first step, you're going to learn and see the second step. Then you take the second step and you're like, oh, I can start $100 investment here. You don't have to start with hundreds of thousands or millions of dollars. Start with $100. Apps on the internet make it so much more accessible.
Right.
But anything is possible. If you live in America, you speak English, you have more opportunities than really anybody else in the world. People will literally risk their lives to come to this country because there's opportunity here. And so if you're here, you have the ability to understand what you and I are saying, and you have that technology to do it, you're blessed.
Yeah.
Now, what do you do with this, right? You have to go out and start learning. You have to go out and start doing. And then the next thing that you have to do,
Number four,
is you have to understand the concept of debt, because we live in this consumer culture. And it's interesting where, we want to live this flex lifestyle, right? I want to show off on Instagram. I want to show off my new car, my new Chanel, Gucci purse. And we kind of get caught up where I need to live a certain lifestyle that way people can think that I'm rich. But what you're doing now is you're living broke,
Right.
making everybody else rich, so people think you're rich.
Right.
You're product rich, you have a lot of nice stuff, but you're broke. And so when you live that type of lifestyle, you are the reason why Gucci, Louis Vuitton, Chanel are making so much money, but it's keeping you broke. The richest person in the world, sometimes he's the second, sometimes he's the third, is the CEO of Louis Vuitton.
No way, really?
Yeah, Bernard Arnault. And why? How did he get there? Because everybody wants to look rich. Everybody wants the Louis Vuitton. I saw this in the pandemic especially. We were in a recession in 2021, but luxury sale of products were breaking new records.
Come on, really?
They're breaking records in 2021.
Why is that?
Stimulus checks went out, people had cash, and some people used that money to save, some people used that money to pay down debt, some people invested that money, but a big chunk of people took that money to places like Gucci, Louis Vuitton, and now you go and spend it.
You would think when the economy is, I guess when people are losing their jobs and there's financial uncertainty of the future, you'd think people would be saving or investing, not spending on luxury goods, especially if you can't even go outside to flex it. You can only do it on social media in the comfort of your home.
You don't need to go outside anymore. You can just do it on social media.
I know.
And so if you don't have the cash to do it, people are going into debt to buy it. And it's becoming easier and easier because of now things like buy now, pay later.
Right.
It is one of the fastest growing industries in fintech. I love financial technology, but it breaks my heart. I mean, it rips my heartstrings when I see the growth of this buy now, pay later, because what does that mean? I can go out and buy anything I want, not pay for it today, pay it off over 3 months, and then if I don't, I get slapped with 25% interest. And if you are 18, or let's just say 21, I give you $6,500. You never invested another penny, but you invested those $6,500, and you could get an 18% return on that money, and you retire at 65, and you look at this investment portfolio, you would have over $11 million.
Wow.
Now, everyone watching this saying, where the heck am I going to get 18% on my money?
Exactly.
But your credit card company is doing it every single day. $6,500 is what the average American household has in credit card debt right now. And you're turning around paying these companies 18, 20, 25% a year, and they're the ones that are getting rich, not you. If you're enjoying this video and want to take your investing to the next level, I want to remind you that I put together a free investing masterclass where I walk you through how you can get started as an investor and find hidden investment opportunities before everybody else. It's a completely free masterclass, and when you register, you'll also get access to market briefs, which is my newsletter for investors, completely free, complimentary as a bonus. So if you want to get the investing masterclass and market briefs all for free, all you have to do is click the link down in the description below to get it. So what's happening? You're going into debt to buy liabilities, which are things that lose your money, and then you're paying interest on top of that, which is making everybody else rich, which leaves no money in your pocket to make yourself rich. And you have to break out of that mindset. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.